Yes, we are talking compliance next. And no, it won't be boring, promise. From shifting frameworks to region-specific policies, navigating compliance is becoming a full-time strategy in itself. This session will get straight to the point. Moderating the conversation is someone who brings clarity to the chaos. Please welcome Ahmed Allam, financial expert at His Highness the Ruler's Court of Dubai, to the stage. You want your notes up for this one? There's some serious takeaways coming your way. Everyone, your stage is yours.
Okay, thank you very much. Actually, good morning, everyone. Actually, it's great to see you all here. Thank you for joining us for this amazing panel. Role of engagement, making sense of global regulation in 2025. All of us know that the financial world is changing faster than ever. So we have got artificial intelligence, cryptocurrencies, new technology, and different rules popping up in every region. It can be hard to keep up and even harder to stay compliant. But these changes actually bring to us some other opportunities. So before we start, I would like to welcome you guys and welcome all of my friends here on the stage. My name is Ahmed Allam. I am senior financial expert at His Highness Rural Court. I'm specialized in financial fraud investigation, especially related to cryptocurrencies and virtual assets. Also, we have brought together a fantastic group of experts who will help us understand what's going on, what's coming next, and how to make smart move in this fast-changing world. So let's start and meet our amazing speakers. I will start to introduce Dr. Stella Mourouzidou Damtsa, Senior Manager at Bank of Cyprus. Stella is the banking professional with extensive experience. She currently holds a senior position at the Bank of Cyprus, overseeing the segment CRM, Loyalty, Analytics, and Business Intelligence departments. She is also a finance lecturer at the European University and a mentor in the IDEA program supporting startup business. It's our pleasure to have you here today.
Thank you.
Let's also welcome Angelos Gregoriou. I pronounce it properly?
Gregoriou.
Gregoriou, perfect. The Chief Executive Officer of Dynamic World. Angelos leads the RegTech and CRM innovation firm, whose platform support brokers operating across Europe, Middle East, Africa, and Asia. He brings valuable insights on technology as a compliance enabler. Thank you for joining us today.
It's an honor to be here.
So Anastasia Sakharova, Head of FinTech Compliance at SumSub. SumSub is a full-cycle verification platform that secures the entire user journey with customizable KYC and KYB, transactions monitoring, and fraud prevention. SumSub helps companies streamline their verification process, welcome more customers worldwide, meet compliance requirements, reduce cost, and protect their business. It's our pleasure to meet you today. Thank you. And Dimitris Taxteris is the Chief Executive Officer of MAB Split. It is a leading consulting group in the provision of solutions in international licensing, regulatory compliance, internal audit, risk management, regulatory and information technology, business resilience, and cybersecurity. Dimitris is also the chairman of the Association of Cyprus International Financial Firms. It's our pleasure to have you today.
Thank you.
So without specific order, let's start with Dimitris. Okay, let's delve directly and straight in one of the hottest topic everyone is interested nowadays, which is the crypto regulation. Dimitris, with MiCA now officially in effect across of Europe, what kind of a change are we seeing nowadays, and how are crypto exchange adapting to this new new regulation and standards?
Okay, thank you so much, and thank you for the opportunity to speak today. I was actually sitting here expecting to hear how you would pronounce my surname. So let's start with a bit of history, perhaps, to say that in about mid 2023 or slightly later, I think it was September or October, we had the whole thing about FTX, which broke out starting from the US. And that's when effectively authorities started to clamp down on the industry of crypto assets and on crypto exchanges, led by the SEC in the US. So apart from FTX, they focused on a number of big players there, which effectively operated globally, and started off their own process of kind of cleaning the industry, in a way improving practices and asking all these crypto exchanges and crypto asset providers to, let's say, get into shape and become more and more compliant with regulations, as they were back then, of course. They initiated a number of criminal or other procedures, and eventually they settled with a number of them, or subsequently closed the cases one way or the other. I think this is a key development in the crypto asset industry, because it was the beginning of its readjustment and the process we see today, which is a process of adjusting to a more compliant environment. And at the same time, in parallel, we observe the normalization of crypto. Later on that year, if I'm not mistaken, the SEC also approved, or beginning of 2024, the SEC approved the first ETFs in the crypto ETFs in the US, beginning from Bitcoin ETFs. That was when big institutional investors or big investment banks also got into the industry, led by BlackRock. Back then, I remember that its Bitcoin ETF was the fastest growing ETF in its first 3 months of operation in terms of AUMs. The key development at the same time in Europe was that in parallel, all these crypto exchanges operating in Europe were requested to register in each country within the EU under the AML laws of each member state, which they did. So separate registers of crypto exchanges and crypto asset service providers or virtual asset service providers were created in each member state in which they operated, or they also registered in other member states where they operated on a cross-border basis through a notification procedure back then. And a few months later, MiCA started coming into play in the EU, initially in mid-2024, and then on a full scale on the 30th of December of 2024. All these registered CASPs were grandfathered in the EU, and they still operate, and they were given a window of they were given a window of 12 to 18 months, depending on the member state and jurisdiction, to apply and receive a full MiCA authorization. I think this is where we are today. We are seeing an adjustment process, a strong adjustment process, whereby all these crypto exchanges and CASPs are adjusting to the new reality of being compliant with MiCA regulations. They are trying to understand what they are requested to do and gradually become fully up to speed with their compliance obligations, which at the same time, in my view, achieves the normalization of the industry, of the sector, and of crypto assets as an additional alternative, let's say, investment class. It's a process which will take another few months, let's say, or another year or so. At the same time, we observe all these crypto exchanges operating in MiFID instruments. So this is an interesting angle because many of them introduce also the ability for clients to operate in futures, mostly. In my view, this is a competitive product for CFDs. One of the main differences being that futures are exchange traded, whereas CFDs are OTC.
So you look so optimistic about the regulating and the regulation applied on the crypto as well.
I think the overlaying trend at this point in time is that we shall see a continuation of the normalization of the crypto industry, and in my view, it will also challenge the online brokers which offer CFDs at this point in time, because probably they will be soon operating all of them in the same pool of investors.
Amazing, amazing. So in general, Dimitris, to dig more deeper about the crypto regulation, from the investor perspective, do you believe this regulation will build an extra trust from the investor perspective, or still we cannot judge at the moment? We still need some time to make sure that this regulation will attract and build extra trust from the investor perspective.
I think it's clear that this is already happening, actually. As I said, all the crypto exchanges are currently obliged to apply for a MiCA license within the EU, but they are also obliged to apply for other licenses in other jurisdictions, as other jurisdictions are also introducing their own laws and regulations. The US, the UAE, although the US is still fragmented, the UAE and elsewhere. So we see kind of a similar pattern to online brokers here, whereby all these crypto exchanges are asking to be authorized in many different jurisdictions in order to be able to continue operating and be able to provide their services. Perfect. So in my view, I see the industry becoming stronger, and as I said, challenging the traditional online brokers in terms of the traditional CFD product they offer.
Thank you for your amazing insights. So moving to Anastasia. Actually, if we take from the perspective of the regulation as it's get more complex, especially around the anti-money laundering and DAC 8 and crypto assets reporting framework, CARF. What's your take about this idea, and how are these cross-border initiatives evolving, and what's the impact are they having on the broader regulatory picture in general?
Yeah, thank you. Regulatory complexity is indeed increasing. but it also brings more structure and clarity on the market. For example, the new AML regulation in the EU introduces single, directly applicable rule book across member states, replacing fragmented national laws. The new AML authority will also establish the consistent technical standards for customer due diligence and other core procedures. That means that we may expect tighter controls, less room for interpretation, or fewer gray zones. At the same time, we can see that regulators focus on tokenized real-world assets and stablecoin regulation. For example, regulators from the EU, UK, the US, and Hong Kong has recently published some proposals and consultation documents. They propose to regulate issuers of such type of assets. So they require they to comply with AML regulation and meet other requirements related to governance, transparency, security, resilience, etc. And besides, platforms dealing with such type of assets should also carry out due diligence on such issuers and assets itself. So this brings both opportunity and burden. Tax is another fast evolving area. For example, under the OECD crypto asset reporting framework and its implementation at the national level, crypto companies will be required to collect self-certification from their customers and report transaction to tax authorities. So it also brings more complexity. So in general, yes, regulatory complexity is evolving, but it's remove gray areas in the sector.
Amazing. Okay, so now we are in the era of artificial intelligence. Anything we talk about, just we have to put this idea, this concept, this hype of artificial intelligence. From your own perspective, how the regulator could benefit from the artificial intelligence tools? Is it possible to benefit from it from the regulator perspective, or it's still just a hype nowadays and there is no real application for artificial intelligence once it comes to the regulators and the compliance?
Yeah, we see a real impact. It's not a hype. From the compliance team's perspective, I can say that AI is simplifying our life. For example, let's look at the AML compliance. So AI can detect synthetic identities and deepfakes now. Deepfakes created by such tools like Daily or Veo have high quality, and it's nearly impossible to catch them with the human eye, but AI can help to detect them. Or we should also mention transaction monitoring, because the traditional rule-based model can miss some red flags, but AI can analyze history of the transaction, behavioral patterns of the customers, and flag all these factors and help compliance team to analyze suspicious patterns and report transactions. Besides, AI can help to detect some fraud networks. It's not just about isolated red flags. It's about networks. So, for example, AI can analyze background during the liveness check, or a device fingerprint and flag all these factors. So that's not a hype.
Amazing, amazing. So Angelos, coming to you, but I will benefit from your area of professionalism and your expertise in a specific area. That's why my coming question will focus more on your specialty and experience. As the AI becomes a bigger part of onboarding and transaction monitoring, how do you see the broker finding the right place between, or the right balance between moving fast with innovation and still keeping tight oversight and compliance? How we could make this balance between the compliance and innovation from the broker perspective?
Our trend is to, the tagline we use is turn compliance into an advantage. So with the tools that we suggest the brokers to use, and starting, for example, from NFC ID scanning for onboarding, the NFC in combination with a liveness test, because when you're scanning an ID with NFC, you get a high resolution photo, which is impossible to get from a normal document. So you extract that high resolution and performing the right deep fakes on the liveness test and everything using AI. You can confirm that the person is genuine, and you can automatically extract all the information that you have on the NFC and onboard the client fast. So this is one very good example of turning compliance into an advantage. Fast onboarding is an advantage, a very big advantage for a brokerage company. Now, another aspect, for example, that we're touching is the AI analysis of voice calls. That's a pain for regulated companies. Why? When it comes to compliance, brokers hire different people to monitor calls in different languages. But with AI and with the right tool in place, you can have a much more precise and a trusted tool that can automatically monitor all calls, and they can flag where when someone is talking with the customer from the company, call it a sales call, a retention call, a customer service call, whatever call, it will flag where the conversation had compliance issues, where the agent tried to give investment advice, for example, which is prohibited, or where the agent was pushy, which is again prohibited, or saying something which is not should not be said. Plus, with all the other benefits that come, so that's another example of turning compliance to an advantage, as I said. Getting all this information, the insights from a call, to benchmark the performance of your team and rate the customer as well, of how much is really affording to become your customer, how much risk they can take, and how positive or negative they are to become your customer, and in combination with all the other information that you collect during the client onboarding to create a real strong and solid profile of your customer within the CRM platform.
Amazing. So based on what you see on a daily basis in your professional career, so this moving or this booming regulations, does it make the broker more excited to invest more in the infrastructure, or does it make them more cautious or more or not more excited to get or to dive in such kind of investment?
From my experience, always talking from an experience point of view, there are regulators and regulators. There are regulators that they're really trying to just perform right compliance without making the broker's life difficult. So they're genuinely trying to do their job in terms of not making the broker's life difficult, but to just apply the law. And there are regulators that are trying to make their life difficult. We have seen cases that brokers fed up with with the regulators that were trying to make their life difficult. So all the rest, we see them very positive in adopting technology to do their correct onboarding of clients, correct screening, and be compliant, because it's to their benefit at the end of the day as well.
Amazing. Thank you, Angelos. So moving to Stella, actually, let's bring the banking perspective on stage. Okay. With fintech on the rise and regulations become more fragmented, how are traditional banks adapting? And with MiCA now in play, what does all this mean for banks and their customers in the real term?
Okay. Traditional banks, we are used to regulation. Regulation is actually in our DNA. We have a compliance department, we have a legal department, we have a third-party risk department, we have a credit risk department, so we are very well equipped to navigate evolving and different regulations at any point in time. And why is this? It's good to step back and understand why are banks so highly regulated, maybe the most regulated industry worldwide. Because we are financial intermediaries. We are collecting deposits from people, from individuals, from retail clients, and we are lending these deposits out as loans to support the economy, mostly to corporations or even to individuals to build their home or to have a personal loan. So we need regulation. We need to be very careful with people's money. And what is regulation? Regulation is protecting the retail investor. So we are protecting our clients. We are here to serve our clients. So what is happening is that we need to be conducting ourselves ethically, with transparency, responsibly, so that we build long-term customer relationships. Regulations usually have loopholes, and that is why they are continuously evolving. That's why ethics comes into place. You are doing the right thing when nobody is looking. So this is a corporate culture, and at the Bank of Cyprus, we have this corporate culture. Compliance and all our control functions, our strategic partners, they are in the room from the beginning. But what are we aiming to do is to provide customer service, to provide seamless customer experience. And what we are doing is analyzing big data, analyzing behavioral data, analyzing customer data, so that we can offer the right products, the right services, digitally and seamlessly. We are the first bank, and I think the only bank, since 2021 that has a customer onboarding, digital customer onboarding. So we are behaving as a fintech. I'm amazed because our new hires are not economists, they are not finance people, they are software engineers, software developers, UI experts. So whenever I see a post in the bank's website for a new job position, it's something to do with technology. So our technology department is growing, our IT department is growing, our branches are shrinking. We used to have hundreds of branches, every neighborhood had a bank branch. Now we are down to 54 in Cyprus, but we are servicing more customers. We have about 700,000 individual customers, and a few tens of thousands of legal entity customers. So fintechs for us are potential partnerships, and I think that also the fintechs are changing their mindset. They are no longer trying to compete with banks, but they're trying to form strategic alliances with banks. We have seen this phenomenon increasing in Europe, and also at the Bank of Cyprus, we have recently built a fintech cooperation with a company called Integral, which is in FX. It's helping us with our FX transactions online. So we offer loans online. You don't have to visit the bank. You can get a personal loan of up to 15,000 euros or a car loan of up to 25,000 euros just by using your mobile app. And we are now automating our housing loans. So even with housing loans, you will not need to come to the bank until at a progressed stage where you will need to bring some documentation. Why? Because you need to go to the land registry to have the title sorted. So not the whole ecosystem is digital. So when you're operating in a system, you need to adapt with that system. So I think regulation is there for the customers. It's a good thing. The previous panel said that banks are slow. I'm sorry, I disagree. Banks are not slow. Banks are very careful because they serve individuals and because they are responsible. We are not slow. We are very careful.
So Stella, based on what you mentioned now, it means that the first glance or the first sight that the fintech is a main competitive or the main competitor to the traditional bank, this idea has been shifted to create some kind of collaboration or cooperation between the fintech companies and traditional bank.
Absolutely. And we see that fintechs are very agile. They move very quickly. They do great things with the user interface, user design. They bring solutions to the table for pain points that banks, because of legacy, because of hundreds of years of existence, still suffer from. So this partnership is actually creating a very good value proposition for the customer and a very good offering. And that is why banks also have incubator programs like the idea Bank of Cyprus has, because these programs, what do? They bring young people into the banking system. We give them knowledge, we give them experience, we provide lessons, we partner with universities so that very young people who do not have enough knowledge, but they have the idea. Mm-hmm. And usually the idea is a solution, an application. They are there and we foster these teams, we look after them, and we see them creating companies that actually create employment. Okay. And they increase growth.
Amazing.
So banks are supporting this.
Amazing. Thank you for your insights, Stella. So circling back, sure.
Well, if I may, a comment which is, I think, interesting to build on. What was mentioned before about AI and the regulators, etc. We also operate in the UK, in London. We have 40 people there supporting FCA regulated firms. And we've launched about a year ago, we've launched what we call MiCA, a virtual compliance assistant, which effectively is a module, a technology supporting compliance officers in their work. You know, simply you go in the platform, you submit questions, you get an answer, and it works with AI effectively. So a few days ago, I think it's interesting to say that a few days ago, the CEO of NVIDIA was touring Europe, if you remember, and he ended up in the UK. And following that, the FCA announced and launched a so-called supercharged sandbox, which effectively is a new collaboration between the FCA and NVIDIA, allowing firms to experiment with AI using NVIDIA accelerated computing and NVIDIA AI enterprise software. So I think this will give access to firms to better data, technical expertise and regulatory support to speed up their IA-related innovation. And we're very happy about that, needless to say, because we would be using it ourselves as well to improve MiCA, to produce reporting modules, etc. So we're looking forward to that as well. But I think it underpins clearly the intention of leading regulators globally and the way technology and AI will be impacting compliance and the financial services industry going forward.
Amazing, amazing. So Anastasia, I'll come to you. So based on what was mentioning by Stella, do you believe that the idea of physical banks will not exist anymore in the recent future? Or we still need the physical bank to go and to manage everything through the branches and meet face-to-face with the customer service guy and so on?
Interesting question. Yeah, we're moving to digital era, of course, but I think that physical banks will still exist. Yeah, because we have a different level of digitalization in the world, and we have different population knowledge. So I think, yeah.
Yes.
You can expect.
Perfect. Angelos, what is your perspective about this? You know, nowadays the teenagers and the new generation handle everything through the digital banks, while the old school guys, for example, such as me, I prefer to go to the branch, put my money, get my bank account details, and all of that. Do you still we have to change this idea even for the new generation and all the new generation, or we still need, or we still need the physical banks and the branches and all of that? Especially, banks prefer to go digitally to save a lot of money, to save a lot of cost regarding the fixed cost, regarding the employee, the rent, and so on.
I would ask Stella, what's the percentage of people going to the store and or?
We have a 90% digital engagement rate, which means that our customers are 90% digitally engaged with the Bank of Cyprus. So, but what we see, and I agree with Anastasia, we see that for big decisions like a housing loan, people, even young people, want to come to the branch to have a discussion, to get information. And I would say that it has to do with financial literacy. Financial literacy, especially in Cyprus, is very, very low. We are ranking very low by EU standards. So when you are going to do a commitment of 30 years or 20 years, such as a housing loan, I usually joke about this and I say that even some marriages don't last that long, but your housing loan is going to last for 20 to 30 years. So you need to have all the information before you make a decision. So we see young people coming to the branches for serious life event decisions. But if it's for getting a small loan, if it's for onboarding, if it's for opening a broker's account and buying some stocks and doing some trading, then they don't waste their time, because to come to the branch, it means that you need to take time off your work, because branches close, they start at 8 and they close at 2. So people are working until 5, until 6. So this means that you need to actually take some time off from your work and come, and you need to find the parking space, and the traffic is horrible. I thought that Nicosia was bad, but I'm sorry, Limassol is even worse. It took me 45 minutes from the entry of Limassol to come to the City of Dreams, and 1 hour from my house to the entry of Limassol, so 2 hours. For Cyprus standards, this is not efficient. And we also see a new trend now with people using Teams. This was one of the good things of COVID. People started being digitally aware of their tools, and they are using Teams, not Skype, not Zoom, but Teams. And they say, I want to speak to you, but I don't want to come to the branch. I want to speak to you through Teams. So they still have a face-to-face interface appointment, but it's not all together with your machine.
Perfect.
It's with a person. So I also agree that physical branches are here to stay, but at a smaller scale, because of cost and benefit, as you said. You were very nice.
Yeah. Unfortunately, we come to the end of our panel. So a big thank for our brilliant panelists for sharing such valuable insights. And thank you again for being with us, guys. And please join me to thank or give amazing thanks for the panelists. And thank you for coming today, guys. Thank you.